You are listening to Charting Wealth's weekly review and forecast for the week beginning Monday, the 24th of October, 2016. We have our third week of down movement in the market. The weekly trend on the total market is down. For the day on Friday, the market was down 0.07%. We have the derivative oscillator continuing to accelerate in downward movement, as is the MACD continuing its downward movement. So, no matter what you might hear from others, from media mavens, from the talking heads, market is in a confirmed down move on our weekly chart, and that down movement is accelerating as per our derivative oscillator. Now, if we look at what happened throughout the course of the week, and again, make sure to mark that on your daily market review. I want you to make sure that you have that on your daily worksheet. What do we have going on throughout the course of the week? Well, we had a big down day on Thursday, the 13th, toward the end of the prior week, back 2 weeks ago. A little bit of an up movement on Friday. Then the week opened again on the 17th for this past week, down, up Tuesday and Wednesday, and then sliding sideways and down Thursday, and more downward movement on Friday, closing the week below the 2-day trend line and, of course, well below the weekly trend line. We do have on the daily trying to cross over going up on the MACD, and the derivative oscillator did flip over going up again. That's on the short-term movement on the daily chart, but again, we ended below the 2-day chart. So make sure to mark your daily market worksheet that we're still in a confirmed down move on the overall market. I'm going to go back to the weekly chart. We're going to take a look at the S&P 500. It was up 0.05%. Again, still down on our weekly chart, accelerating a little further down as far as the derivative oscillator goes, and the MACD is continuing to move down also. Our second week in a row of down movement. That third prior week was a doji, but again, we closed below the 2-day chart and the weekly chart. If we look what happened intra-week on the daily chart, looks somewhat similar to what we saw on the total market, down on Monday, following that big plunge on the prior week's Tuesday, Wednesday, and Thursday. That was the 11th, 12th, and 13th. That movement continued down on Monday, the beginning of last week, the 17th, then up on Tuesday, Wednesday, a doji on Thursday, lots of indecision, and then down movement on that Friday. And again, these are our Heikin Ashi candlesticks that we use. If you don't know what a Heikin Ashi candlestick is, it means average pace in Japanese. And we use that chart. We have some great training you can find at Charting Wealth's YouTube channel. You can also find it at our website. You want to listen to the Heikin Ashi training. Great candlesticks. We like them a whole lot better than the traditional Japanese candlestick. Market is still well below the 2-day and the weekly trend line. Confirmed down movement on the weekly chart for the S&P 500. Now, as we flash back to our weekly chart, we're going to go to the Qs. The Qs is, of course, the NASDAQ 100, and look at what happened, or listen to what happened at the end of the week. The Qs crossed over going down on the weekly MACD. Crossed over going down on the weekly MACD. It had crossed over going down the prior week on the derivative oscillator, but it crossed over at the end of the week going down on the MACD. That is for the 21st, the week ending the 21st. We also saw the derivative oscillator heat up with further down movement. We had a doji back on the week ending the 14th of October, meaning indecision. Well, the market decided to move over and head down. Now, again, if the week has the new week has a lot of up movement, it could just as easily pull that back over and you would never see the crossover going down. So again, we've marked it as a confirmed down move. You need to mark your charts and be ready for some down movement activity. If indeed you see that 4-hour chart revert over going down. Right now, the 4-hour chart has been going up. We're looking at the daily chart. It, of course, was down on Monday like the other two charts, up on Tuesday, and then down on Wednesday, Thursday, a little up on Friday. Still in the negative on the derivative oscillator. No crossed over going up on the daily chart yet. But again, the market really slid sideways starting at about Tuesday. But we now have a crossover going down on that weekly chart. The market closed below the weekly and below the 2-day chart. So again, be cautiously optimistic that you might be able to find a good down play on the Qs over the course of the next week. QID is something for you to practice with. That is the double short Qs, double short NASDAQ. You might want to look at jumping into that on one of your virtual trades and seeing how well you can do if indeed it sets up to be a real trade. So be sure now to mark your charts that the Qs, unlike in the past, it is now switched over going down on the weekly chart. All right, let's lastly look at GLD. GLD is in a confirmed move still on the weekly chart going down and on the 2-day chart going down. There has been a great deal of up movement over the course of the past week. It's actually brought it up to right just below the weekly trend line, but the weekly trend line, the weekly trend still is going down very strongly. The MACD is still heading down, and the derivative oscillator actually even gained downward momentum. If we look at what happened over the course of the week on the daily chart, it actually crossed over on the 19th going up. The week started out with just a doji, then moved up on Tuesday and Wednesday. Little sideways action on Thursday and Friday. But of course, the chart we've been using for everything when it comes to gold is that 4-hour chart, and it has been working, although gold might be getting long in the tooth on that up move. So again, watch gold, see if indeed you can find a good down move, because if that 4-hour chart rotates over going down just like the weekly and the 2-day, you may want to be there for an inverse trade in gold. That's where we are as far as all of our charts go. You know what we do on the weekly review and forecast. We go over things that moved the market over the last week and what might be moving it over the coming week. Well, let's talk first some Fed news. We hear from Stanley Fischer, who is the U.S. Federal Reserve's vice chair, that the central bank is close to achieving two of its goals, that is full employment and inflation near 2%. These comments come in anticipation of a hike in the federal funds rate that may occur at their December meeting. But Fischer also warned when he was speaking to the Economic Club of New York that it's not simple for the Fed to simply hike interest rates because of all the things that are occurring in the world. What did he talk about? Well, he talked about weak demand. He talked about low investment, having trimmed global economic potential. He talked about the aging population. And as we continue to watch things, we may see the Fed actually up the interest rate sometime, well, at their December meeting. But again, there's a lot of things out there with a global slowdown that could affect them. And of course, what do we have going on? We've got a very, very important election happening in early November. So let's pay attention, see what we see. I do encourage all of you, if you don't have a copy of the Stock Trader's Almanac, you're getting toward the end of the year on 2016, but you could at least ask in your stocking to have the 2017, and I would urge you to immediately open it up and read the section on presidential cycles, and you will find some news that should make the bulls scared and the bears happy, because when we get out of this election year, markets tend to start taking tumbles. So just be aware of that regardless of what the Fed does. Now let's also talk about inflation. It is on the move, not in the United States so much, but in the UK, actually up 1% in just September alone. Of course, don't forget the pound has lost a great deal of its value, and you can expect, of course, when your currency loses value, that the higher cost of imports are going to cause your inflation in that economy. That may very well be what is happening. Also in the UK, they do have their unemployment stable. It's at an 11-year low. So with the good news comes some bad news and vice versa. Just continue to watch the UK, see how that whole Brexit plays out. China's growth in the latest report has held steady at an annual growth rate of 6.7%, but it appears that the economy is being stabilized after the turbulence in 2015 and earlier in 2016. But the economists worry that this, quote, stabilization is being driven by, guess what? A credit surge that's totally unsustainable. So just continue to watch, see how long it takes for China to collapse. It may be a while, but remember those headwinds out there. This is a fascinating story. The Kingdom of Saudi Arabia wanted to sell some bonds, $17.5 billion of 5, 10, and 30-year bonds. It's the largest single bond sale ever in an emerging market. Guess how oversubscribed it was, how desperate people are to earn some interest. $67 billion chased the $17.5 billion that were sold. Amazing. And just amazing. Okay, now lastly, as far as the news that moved the market this last week, the ECB, the European Central Bank, left its rates unchanged. They, of course, have quantitative easing underway, but they're still saying it's scheduled to expire in March of 2017. However, in their next meeting, they could extend that, but that is where things are at the moment. Now, what might be, and also U.S., some data. We had some data come in. Again, mixed data. We heard, of course, that the Fed is probably going to be increasing the interest rate. And we had things come in like an uptick in the Philadelphia Fed manufacturing index. It was up 9.7 versus 5.3 that was expected. And new home sale or existing home sales also peaked up. Lowlights, things that were actually a drag in the market, was a decline in housing starts, and the Empire State's Manufacturing Index was actually negative 6.8 versus an expected 1% uptick. So again, keep that in mind as we continue to move through things. It appears, though, if free money just keeps being available, everything is wonderful and the stock market goes up. Well, that will end at some point in time. What do we have going on that might affect the market this next week? You'll see on Monday the flash purchasing managers indices are going to be released globally. That's going to be interesting. Something is really, really good or really, really bad. Of course, when the market's desperate for news, that might do something. Thursday, nothing else really until Thursday. U.S. durable goods orders are going to be reported. And then Friday, Q3 GDP in the U.S. is going to be released. And Japan's going to report its September Consumer Price Index. Again, if any of that U.S. news is really, really good or really, really bad, or we have all sorts of global purchasing managers indexes come in and they are super, super good or super, super bad, and the market wants to, it may drive some things up, but nothing like a Fed meeting there over the course of this next week. Folks, there you have it, our weekly review and forecast. The information that I was giving out about our daily market worksheet and making sure that you marked those as far as where the weekly trend was. Very important for those of you who really want to excel in learning how to read the stock charts. If you will fill that out every day, and if you don't have one, here's how you get one. You simply go to chartingwealth.com, subscribe to our daily podcast. You'll also receive this weekly review and forecast. And with that, you will see a link to our How to Read a Stock Chart video, 15 minutes of everything you need to know to get started in learning to read stock charts. You'll also get a link to our PDF for our daily market worksheet, and you will get the layout that we use at freestockcharts.com to help you chart and follow along with us. Thank you so much for being with us. If you appreciate what we do, we ask you to do a couple of things for us, and we really appreciate you doing this. And if you could take just a couple minutes, it'd mean a lot to us. If you appreciate what we do for free for you every day of the week, plus the weekly review and forecast, go to iTunes, subscribe to our podcast, give us a 5-star rating. Also, if you would, go to our YouTube channel and subscribe. We thank you so much. You can find us at Facebook, Instagram, YouTube, you name it. We are there for you. We are chartingwealth.com. Hope you have a wonderful week. God bless you.